Hello everyone! The billionaire entrepreneur and CEO of Tesla, SpaceX, and several other startups, Elon Musk, is being sued by Twitter investors for delaying disclosure of his stake in the company. For years, Elon Musk has been one of the most influential and well-known entrepreneurs in the world. He founded Tesla Motors, SpaceX, and several other startups that have revolutionized various industries. Recently, he's been in the news again for a lawsuit filed by Twitter investors who allege that he delayed disclosing his ownership stake in the company. Do you want to know the insider scoop on what happened? Stick around till the end, and we've got you covered. Don't miss out on our next update. Subscribe and get your hands on the latest stories before the rest. So let's first look at what happened to Elon Musk. As you may have heard, Elon Musk agreed in late April to buy Twitter for $54.20 per share. But now, investors in Twitter have sued Musk, claiming that he manipulated the company's stock price downward. So they allege that Musk saved around $156 million by not disclosing that he had purchased more than 5% of Twitter by March 14th. In addition, Musk continued to buy Twitter shares after that, and it was only in April that he disclosed that he owned 9.2% of the company. William Horesniak, one of the investors who is suing Elon Musk, stated, "By delaying his disclosure of his stake in Twitter, Musk engaged in market manipulation and bought Twitter stock at an artificially low price." The investors also said public criticism by Musk of the company, including a May 13 tweet stating the acquisition was temporarily on hold until Twitter proved that spam bots accounted for less than 5% of its users, amounted to an attempt to further drive the share price down. Media reports tell us that these investors have filed a class action suit against Musk, and they want punitive and compensatory damages for the losses they faced. In this suit, the investors have also made Twitter a defendant. They state that Twitter had the obligation to investigate Musk's conduct, but Twitter didn't do anything, though they are not seeking damages from the firm. Next up, let's look at some of Elon Musk's other legal troubles. So media reports tell us that the timing of Musk's disclosure of his stake has already triggered an investigation by the U.S. Securities and Exchange Commission, or the SEC. So, according to the SEC, any investor who buys a stake exceeding 5% in a company has to disclose their holdings within 10 days. In addition, Elon Musk was sued earlier this month in Delaware by the Orlando Police Pension Fund seeking to halt the deal. So the Orlando Police Pension is an investor in Twitter. The fund alleges that Delaware law was being violated because Musk had agreements with other big Twitter shareholders like Morgan Stanley and Twitter founder Jack Dorsey to support the buyout. These agreements made him the effective owner of more than 15% of Twitter's shares. In such a case, a quick buyout was not possible. Lastly, let's look at whether Elon Musk is stalling the Twitter deal. So, it seems like Elon Musk is acting in a way to suggest that he is either trying to tank the deal or renegotiate it for a lower price. But since his April announcement to buy Twitter, the stock market has fallen hard, and some big-name tech stocks, including Tesla, have taken a particularly tough beating. The issue is that Tesla shares make up most of Musk's net worth, and Tesla has lost hundreds of billions of dollars in value as its share price has gone from around $1,000 to the mid-600s and recently back above $700. Moreover, Musk's involvement with Twitter has spooked the investors in Tesla. Tesla shareholders didn't like it when Musk used Tesla shares to secure a loan to buy Twitter. Tesla's stock price has recovered some since Musk announced that he was ditching his plan to use Tesla shares in his financing to buy Twitter. Now, there is a lot of confusion about what will happen to Twitter. Some media reports tell us that Musk may completely back out of the Twitter deal, but there are other reports saying that backers, including some of Silicon Valley's most prominent venture capitalists, successful entrepreneurs, and small-time investors, are pulling their money together to help Elon Musk finance this deal. Musk has received a commitment of $1.2 billion from top Silicon Valley venture capitalist firms, Sequoia Capital, and Andreessen Horowitz, and $1 billion from Larry Ellison, an old friend and Tesla board member. This is because many investors in Silicon Valley see Elon Musk as a potential savior who can turn around Twitter. They believe that since Musk has a personal stake in Twitter's success, he will be motivated to make Twitter profitable. Moreover, Saudi Arabia's Prince Alawid bin Talal Al Saud and the Chinese crypto firm Binance are also interested in backing Elon Musk. This development is attracting international interest as well. In addition, regulators in America and the government is getting worried about what is happening to Twitter. Sources close to Elon Musk have told the media that Musk is personally vetting and approving each investor. What do you think about the lawsuit against Elon Musk? Do you think he did anything wrong? Let us know your thoughts in the comments. We'd love to hear what you have to say.